The recent escalation in trade tensions between the United States, Canada, the European Union, and Mexico has sparked widespread concern, with many fearing the onset of a full-scale global trade war. The series of retaliatory measures from these countries has sent shockwaves across international markets, leaving businesses scrambling to adapt and governments racing to protect their economies. After the U.S. imposed a 25% tariff on steel and aluminum, the European Union responded swiftly with a retaliatory tariff package worth approximately $40 billion, equivalent to 26 billion euros. The EU targeted a range of U.S. products, including industrial goods like machinery and cars, as well as agricultural products such as fruits, vegetables, and wine. More than 2,800 American products have been affected by these tariffs, with iconic brands like Levi's jeans, whiskey, and Boeing spacecraft now facing higher costs. U.S. businesses, particularly in the agriculture and industrial sectors, are already feeling the pressure as they lose access to export markets while simultaneously grappling with increased production costs. Canada's response was even more forceful. Shortly after Trump's announcement, Prime Minister Justin Trudeau unveiled a staggering $760 billion plan to retaliate against the U.S. tariffs. Canadian businesses quickly mobilized, shifting away from American products and embracing local goods or seeking alternatives from Europe and Asia. The Comprehensive Economic and Trade Agreement, CETA, between Canada and the EU facilitated this shift, with trade between the two regions increasing by 7% since its implementation. Canadian companies eagerly capitalized on these new opportunities, reducing their reliance on the U.S. market in the process. Meanwhile, Mexico, one of the U.S.'s largest trade partners and the second-largest steel exporter to the U.S., chose a more measured approach. President Andrés Manuel López Obrador opted for negotiation over immediate retaliation, seeking a peaceful resolution while keeping the door open for tariffs if necessary. However, Mexico faces its own set of challenges. The nation's steel industry is projected to reduce output, while higher tariffs on agricultural exports like tomatoes and avocados threaten to disrupt the sector. The economic strain has put pressure on Mexico's leadership to act decisively. Brazil, another key steel exporter to the U.S., also opted for a more restrained response. Finance Minister Fernando Haddad condemned the American tariffs as unjust and pledged to pursue legal measures through the World Trade Organization, WTO, rather than resorting to immediate retaliation. Like Mexico, Brazil hopes to avoid further escalation while exploring diplomatic channels. Yet, the most dramatic developments have unfolded between the U.S. and Canada. Trump's decision to double tariffs on Canadian steel and aluminum from 25% to 50% provoked an immediate backlash. Ontario, Canada's most populous province, responded with a 25% surcharge on electricity exports to the U.S., affecting 1.5 million households in states like New York, Michigan, and Minnesota. Premier Doug Ford didn't stop there. He threatened to cut electricity exports entirely if American tariffs remained in place, a move that could cause rolling blackouts and drive energy costs even higher in these states. British Columbia imposed tolls and fees on U.S. trucks passing through the province to Alaska while tightening import regulations on fuel, food, and consumer goods. Additionally, purchases of alcohol and agricultural products from certain U.S. states were halted. Other provinces followed suit, with Nova Scotia banning U.S. businesses from bidding on government contracts, and Manitoba and Newfoundland removing American goods from state-run retail stores. These measures have disrupted U.S. supply chains and made it increasingly difficult for American products to access Canadian markets. Canadian retaliation went beyond tariffs and trade restrictions. The government accelerated its efforts to diversify trade relations, strengthening ties with Europe, Asia, and Latin America. The expansion of the Trans Mountain Pipeline enabled Canada to export oil to Asian markets at a higher value, reducing its dependence on the U.S. for energy exports. Asian countries like Japan and South Korea eagerly embraced these new Canadian energy supplies, shifting away from the Middle East. The economic fallout from these actions has been swift and severe. The U.S. stock market plunged, with the S&P 500 dropping 0.8% within hours of Trump's announcement. Steel, aluminum, and auto manufacturers experienced sharp declines in stock prices. The cost of steel and aluminum surged, driving up production expenses for U.S. manufacturers, particularly in the automotive and construction industries. Automakers like Ford, GM, and Tesla scrambled to reorganize supply chains, with rising production costs threatening to push car prices to record highs. In response to these mounting pressures, the Canadian government allocated $40 billion in relief funds to support businesses and workers affected by the tariffs. This fund offers tax breaks, payroll subsidies, and direct financial assistance, ensuring that Canadian industries remain resilient in the face of economic adversity. Mexico, meanwhile, prepared its own set of countermeasures. Should negotiations fail, the Mexican government has threatened to impose tariffs on U.S. agricultural products, such as corn, soybeans, and beef, commodities that form the backbone of American agricultural exports to Mexico. Additionally, Mexican officials have discussed blacklisting U.S. companies, which would severely impact American businesses benefiting from Mexico's low production costs. As tensions mount, Mexican President Claudia Sheinbaum continues diplomatic efforts to ease the crisis. Sheinbaum's upcoming call with President Trump is expected to be a decisive moment in determining whether negotiations can avert a full-blown trade war or whether retaliatory measures will further inflame the situation. Throughout this escalating conflict, Canada has emerged as a symbol of resilience. What began as a defensive reaction to U.S. tariffs has become a strategic pivot toward greater economic independence. By deepening trade partnerships with Europe, Asia, and Latin America, Canada has begun laying the foundation for a more diversified and robust economy. The political landscape in Canada has shifted as well. Prime Minister Trudeau has seen a surge in popularity, with Canadians rallying behind his firm stance against U.S. policies. A strong wave of nationalism has swept the country, uniting citizens in defense of their economic sovereignty. The long-term consequences of these developments cannot be ignored. As Canada asserts its role on the global stage and strengthens its economic ties with new partners, the traditional North American trade dynamic is undergoing a profound transformation. The once stable relationship between the U.S. and its neighbors is now marked by tension and uncertainty. With each retaliatory measure, the prospect of economic recovery grows more elusive. What began as a series of tariffs on steel and aluminum has spiraled into a complex web of economic, political, and social consequences. As the world watches these tensions unfold, one thing is clear: the future of North American trade will never be the same.